Hi everyone, Chad Helmcamp here with BWC Lending. Today we're talking about where can you pull your funds for your down payment. Without a doubt, first-time home buyers, I'd say the biggest obstacle to owning a home is coming up with the funds for the down payment and the cash due at closing. And just as a brief explanation, there are three primary components for the cash due at closing. Your down payment, number one, then you've got your closing costs, and then you have your taxes and insurance. Those three things are ultimately what's going to make up the total of your cash due at closing. I encourage all of my first-time home buyers to concentrate on trying to save somewhere between 6 to 8% of the purchase price. If you've got 6 to 8% of the purchase price, in all likelihood, that's going to put you in a great spot to be a very competitive home buyer in today's market. Now, where can you get those funds from? Well, of course, if you're a great saver, maybe you've already done it and you've got money in your savings account, ready, willing, and able. Maybe they're investments, whether it be in mutual funds, stocks, things like that. But without a doubt, the one source that people don't look at very frequently is the 401k or an IRA for that, for another term for a retirement plan. 401ks will allow, most 401ks will allow you to withdraw money as a distribution, which is one way to do it. And usually you can take about $10,000 out of your 401k. When you take that $10,000 out for a first-time home purchase, that $10,000 is exempt from the 10% early withdrawal penalty. So that's one of the benefits. Now you will have to pay income taxes on that amount withdrawn, but of course it's one advantage that you may have. I always tell people reach out to your 401k and make sure they do allow for that. Secondly, 401k plans will allow you to borrow from those funds. And a lot of times they'll let you borrow up to 50% of the value of the account. So if you had $50,000 in your 401k, you might be able to borrow up to $25,000. And then when you pay that money back, you're paying it back to yourself with interest. That interest goes to you. I had a client recently think that interest went to someone else. And I'm like, no, you're paying yourself that interest. So I think that's a great source to consider. Over and above that, maybe you have generous family. Maybe you've got a parent or a grandparent or an aunt and uncle that might be willing to help you by providing a gift to help you with some of those funds. I'd say those are the two other scenarios, other than your own hard-earned money, that you could look to help get you into a home. Hope that helps. If you've got any other questions on it, don't hesitate to give me a call.